Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 17th of January 2024. So stock markets are lower across the board. It's partly because of a strong pushback against early 2024 rate cut bets by officials from the Federal Reserve. And today we heard from Christine Lagarde, the ECB president, who called for a rate cut in the summer. So a lot later than the market has been expecting. And that's why we are seeing the likes of the DAX and other European indices underperform. But we also had weakness in Chinese data, while inflation in the UK surprised to the upside, coming in at 4%, which is another reason why the Bank of England might delay cutting interest rates. So looking at some of these indices then, the DAX index has broken below the previous record high that was hit in July of last year at 16,532. It's also broken the previous week's lows, which is bearish, obviously. So the short-term path of least resistance is therefore to the downside on the German DAX. And from here, it could get to the highs from 2022, 2021. These levels are around here. Or go even lower than that and head down to this key area of support around 16,000, where we also have the 200-day moving average coming in just below it. China's markets have been struggling for several years now, and since peaking in February 2021, I think it was, it has just been making lower lows and lower highs. And that trend continued in recent months, with the index breaking lots of key support levels, including the March 2020 low, this level, the October 2022 low, and more recently, this week, it has broken the December's low as well. So it's now potentially heading down to the January 2019 low, which was hit over here. Looking at some of the US indices now, and the S&P 500 nearly got to the 2022 record high that was set in, I think it was January of that year. Yeah, it has turned lower from just below it, from extremely overbought levels, I must say. So we could see the short-term trend turning more bearish as more support levels break down. The next potential level of support, should the index break more decisively below the 21-day exponential this time, comes in at around 46.90. Thereafter, we have this year's low at 46.53. And then beneath that, there's nothing significant until the shaded blue area, where the July 2023 high converges with the point of breakout in early December. But remember, the DAX in Germany has already fallen below its corresponding level. So this could be an early indication that the US markets, which have been outperforming, could be heading lower as a result of the signals we are getting from other equity markets. With the market expecting several rate cuts in 2024, unsurprisingly, the Nasdaq has been on a big rally in recent months. And yesterday, it looked like it was going to head to a new record above the December high. However, it stalled there, even though we saw a couple of stocks such as Nvidia climb to new highs, which has now pulled back a little bit. But the tech sector did stage a strong rally, or some stocks in the tech sector yesterday. But today it is the complete opposite, with the market going down because of the strong pushback against those rate cut expectations from the Fed. So some of the key levels to watch from here include this level right here at 16,417, the base of the previous breakout earlier this year. Below here, we have this level, which has already been tested. So a break below that level will create a lower low, which would be a bearish sign if we see it. Now, spare a thought for the FTSE, because it is having a horrible day so far, breaking lots of support levels, and it's down by around 132 points, which is a lot for the FTSE. The key levels of support that needed to hold was this area that I had previously shaded in blue, where we had the 200-day moving average and previous support and resistance converging. We also had a trend line. Once those areas broke down yesterday, there was really little reason for the bulls to remain long, and lo and behold, we've seen a continuation to the downside. From here, it looks like there's not much further support until the October low, which comes in at 72.57. The March low from last year comes in at 72.02. So those are the next key levels to watch for potential bounce. In terms of resistance, the base of today's breakdown comes in at 75.29. So that will be more of a longer term level, because the market has already sold off significantly. So for it to get all the way back here will require some effort. So if it does get there in the next few days, but that will be the key level that the bulls will need to reclaim in order for the trend to turn back bullish. For latest market analysis, make sure to check out the news and analysis section at cityindex.com.